joined in 2013, late 2013, and the company had just acquired a welding solutions business and also a nuclear business. And so we'd operated that way as a big galvanizing business, plus infrastructure solutions, as we came to call it, which was a diverse set of business units. What we found, though, there wasn't a lot of scale between them, and they ran much more cyclical than you'd like for a public company trying to report on a quarterly basis. So we had this very solid, highly profitable, fairly low growth galvanizing business, and then we had this disparate group of business units that we really had a hard time explaining to the market and even forecasting what the outlook would be for those. So I think there was the confusion. On the other hand, diversity can smooth cycles at time. But it was really that cyclical nature through the different seasons that caused us to look at it and say, what are we really good at? We're really good at metal coatings. We should do more metal coatings. And so then what can we do with infrastructure solutions, as we called it? I've always liked focus, but having enough diversity within the business groups that you can pivot towards whichever market is active, whichever products might be active. But in this case, there were no synergies between the metal coating side and the infrastructure solutions side, and there wasn't much synergy that we could find within infrastructure solutions. And so we start to focus on for cash utilization and capital deployment, capital allocation, where are we going to put our money? So we found ourselves acquiring more electrical businesses and trying to expand that and making investments internationally, which was one of the other issues. Infrastructure solutions was very global, and galvanizing was US and Canada. So you've got this one business with really low overhead, focused on productivity, focused on customer service and efficiencies, and this other business that's constantly battling currency fluctuations, different economic situations in different countries, and yet still not having enough scale to drive their own destiny, so to speak. So that's why we decided we really are better off focusing. We knew there were other metal coatings assets out there that could be attractive, but we were going to need the cash, and we're going to need the leadership time to actually go focus on those and figure out how to add value there. So that's what probably I'd say that drove the decision more than anything else. And during COVID, that also affected it. The infrastructure solutions side was affected far more dramatically than galvanizing, because essential infrastructure on the galvanizing side still had to repair roads, still had to build transmission towers, still had to keep power generation going on. Whereas refinery turnarounds basically went to almost zero. You couldn't get resources on sites. And so that really was the final nail for us, which said, one of these businesses we understand and we know what to do with it and we can run it through the cycles. And this other business probably belongs, at least for a time, in a private setting where you're not at the mercy of these quarterly reporting cycles, where you can build it up, fix it, structure it, build scale, do the things that you could do in a private environment. And we had several things to consider when we were looking at divesting infrastructure solutions, because we could divest the whole thing, but it was this disparate business group, and so there wasn't one singular strategic that was going to look at it. We could also divest it piecemeal, and we did a little bit of that. We divested Nuclear Logistics Inc., which was a nuclear component replicator, so to speak, and SMS, which was a labor augmentation kind of business. So we divested those two businesses during 2020. Coming out of COVID, but I could tell you we maintain a small corporate overhead structure, and those were highly dilutive to our resources and assets. And divesting things wasn't something that we proved to be great at, particularly if we were going to do these on a one-off basis. And so looking at it as potentially 6 or 7 other transactions to have to go divest, that was daunting. And then looking at divesting the whole thing, I struggled with that because you could see the benefit of these businesses. We felt really good about those, especially about electrical, because you could see this electrical power generation, energy, infrastructure build, data centers. You could see this bow wave of activity coming. And so I really didn't want to turn loose of all those assets. So that's where a joint venture came into play, was kind of, in my mind, yeah, we can get cash. We can let somebody else go take it private, focus on it, build it, and we would still be the beneficiaries of a portion of the growth in it. So that proved to be the most exciting option and the one I like the best because, like I said, I really like those businesses. We just didn't have the capability to focus on them as fully as we needed to. Yeah, we chose this joint venture because that was going to allow us to participate in the growth of those businesses, which I really liked. I'd been here, 10 years at that time, and we'd invested a lot, and you could see the potential in them, particularly if they could be taken private, grown, fixed, fine scale, invested in, without having to report the quarterly earnings as we have to do as a public company. So I was excited about the joint venture. That allowed us to benefit from what I saw as a bow wave of potential activity for the electrical side with data centers and green energy, renewables, all of the electricity generation that was going to have to be built out and transmission distribution. So that just looked like an exciting future that wasn't a good time for us. And two, obviously, if that all played out and we had the right partner, which we ended up finding, then we would be the beneficiaries of that down the road. Because I had known Nick Santhanam for years from his McKinsey days, and we just had great conversations. So for me, I'm a relational kind of leader. I lead by trust. And so I trusted Nick. I'd met some of the other Fernway folks, built great relationships and trust. It was just a natural firm to turn to when you think about titanium economy, and I think about, who's best positioned in this industrial sector to partner with, particularly bring in some of the tools that INA had. So I just looked at it and said, hey, we've got these great opportunities. It's a great business, but we need to transact something because we're going to go focus on metal coatings. And those early discussions with Nick, coming from a basis of trust and knowing what the capabilities were, because, being able to dedicate outstanding resources and talent and bring process and tools to a business that was just kind of suffering from a little bit of inattention from our side, but also our inability, the fact we did have to report it every quarter. So, your hands are a little bit tied in the short term. And because it was disparate businesses, having a team like Fernway and INA to really hone in on that and add some leadership. We had some really good leadership, but needed some more strategic leadership to be brought in. And so it felt like with Nick and the team's relationships, that was going to be a great partner. It was exciting to watch because having transformed businesses myself and seeing the approach that INA was going to take, first bring in a great, I'll call it a corporate leadership team, seasoned, experienced, CEO like Bill Johnson to bring him in to lead it. And then they had initiatives that were coordinated under Spark. And this was a whole host of things that were going to allow the plants to benefit and find synergies, improve processes, drive process discipline, bring in resources that could help grow the business, focus the business, drive operating efficiencies improvement, focus on customers. And so there was just this host of, I forget the number, but it was a large number of projects and initiatives that were reported on. I mean, I saw them as a director, saw them at board meetings, and you could see the progress. And you could also see that they were unlocking the value in these businesses as there was the focus, the discipline, the tools, and the Ina resources who just had some fantastic tools and processes to bring to bear. Yeah, as a board member, it was fun to watch, and kind of as an outsider insider, and still a shareholder. So, but it was the bringing in that seasoned leadership, putting the plans together, using the tools that Ina could provide around operating efficiency, driving on, and also driving the discipline. I think, a process that can keep discipline, focus, scheduling around these key things so that they don't just slip through the cracks like so often happens when other priorities come in. And so just keeping that focus. I also think unleashing that leadership talent, using these processes, using the resources that came to bear. I really liked the focus on growth and core markets. Let's go focus on core markets. Let's drive growth. Let's take advantage of the market opportunities that were out there. And I think that was one of the big things, that particularly on the electrical side, that just unlocked these opportunities. It was great for us because in 2022, we acquired a company called Precoat Metals. Metal company, coil coating. They're similar to our galvanizing business. We're the largest independent hot dip galvanizer in the country. Precoat was the largest, and it's pre-paint, so it's pre-painting sheet metal on coils at 500 feet per minute. They were the largest independent coil coating company. And I had kicked the tires on that back in 2018 and really liked the business. Unfortunately, we couldn't afford to buy it back in 2018. So because of the carve-out and the cash that we got from the joint venture, we were able to do this. So we did the deal, then we completed the divestment of 60% of Infrastructure Solutions to Fernweh, which gave us the cash to quickly pay down the debt, bring our leverage ratio down, but even more importantly, to now focus our resources on another coatings business that had very similar, completely different operating equipment and processes, but very similar attitudes, processes, how you approach the customer, how do you deliver value and create value add. And leadership style was exactly the same, because so often deals go south because the cultures don't fit. This was one where we were just finishing the divestiture, actually over here at the hotel, and came over for our first AZZ leadership meeting with now the new team. AZZ Galvanizing, AZZ Precoat Metals, and you cannot tell who was from which side. They were that quickly acclimated, and they just spoke the same language, versus there'd always been this kind of tension with Infrastructure Solutions, two different languages, two different styles. One's building products, the other is a tolling business and Precoat was another tolling business. So we don't take ownership of the customer's metal. We just paint it or hot dip galvanize it, and then provide a host of services around that. So it was just exciting. It unleashed that opportunity. I'm not sure we could have pursued that opportunity if we had not done the joint venture. Number one, be bold. If, after 10 years, I guess, we're rocking along, we're doing good. We were profitable. We generated lots of cash, but we had been stymied in our growth because we weren't able to dedicate the resources to the galvanizing side to grow it, or to find the other metal coatings businesses that would provide the synergies that we really wanted. And then we had, for us, a suboptimal, diverse set of business units without scale. So make that decision. It's like, it's not going to get better if we just sit here and hope. But it can be tough because, like, these businesses, they've been part of AZZ for a long time. Some of them had roots going back 50 years. Two, find the right partner. And back to that trust relationship. Sometimes, you're building relationships with, and not even thinking, like for me, with Nick. I wasn't even thinking of Nick as a potential partner. I was thinking of him as a potential consultant. And yet, over time, I found so many common things we shared around how do you operate industrial businesses, how do you grow, how do you lead, how do you develop great people and talent, how do you build a culture. So find that right partner. 3, I think for me, it's what are you trying to accomplish? What are you good at? Do you understand what you're good at? For us, being a tolling operation, we didn't have a big corporate staff that was going to deal with subscale global businesses. So, and particularly as a public company, where you're constantly marking your currencies to market, you're having to deal with these disparate businesses that are running on different economic cycles and market cycles. Whereas if that's a private organization, they can do that and build the strength, improve the processes, go ahead and unleash the talent. So I think for me, those are the key things that you have to do. And then 4, when you do that, get the right leadership team in place. Because obviously, if the leadership team we had, and they were great people, great operators, great, at so many things, but you have to have a new team that can look at this as a different venture, and how are we going to maximize the value and create value in this differently than what maybe was being done. So making sure that, and in our case, it was having a partner that could bring that kind of a team in. I think for me, 1, highly successful. The recently announced deal to divest EPG to Invent will generate significant cash for us, a very nice gain. To me, it's not the culmination of everything, because there's still assets that are part of Avail that I hope will continue to grow and do well. But to me, it's another milestone that says, yeah, we made the right decision. Precoat has done great. We were able to focus on it. We changed some things in how they were operating, which got almost immediate benefit, driving that business. I mean, because for hot dip galvanizing, it's a 30+% EBITDA business and very consistent, tremendous customer value, great tools. Precoat, similar, but a lower profitability, but we've got them up right at 20% EBITDA margins. They're growing, and they fit in our culture. So, for me, with Avail, and it's fun being on the board, because seeing what they're doing, they're investing in some technologies, they're investing in resources and assets and capital, and then to see that, they were very attractive to Invent on the electrical side. It's exciting. I can't say enough about and celebrating with what I now refer to as my friends from Fernweh and Ina, as we just watch the continued growth and performance and these kind of results. So it's been very, very fruitful for AZZ, and our share price has gone up pretty dramatically. I think our shareholders like the idea. Good, you're going to go focus on. You're going to keep a piece of this. You're going to focus on metal coatings, and we see the results of that over the last couple of years.